Let's talk about an everyday item you probably overlook: cardboard boxes. Today we're unpacking JPMorgan's top 5 paper and packaging stock picks for Europe, the Middle East and Africa, looking ahead to 2026. Why care? Because every online order, every push for sustainability, drives demand for paper-based packaging. E-commerce is booming, and governments are pushing for alternatives to plastic. Paper is leading the charge. These companies aren't just making boxes, they're innovating with sustainable solutions and circular business models. We'll break down what makes each company stand out and why JPMorgan's analysts are bullish. Stick around. This could reveal overlooked opportunities for your portfolio. First up is Mondi, a global leader in sustainable packaging. JPMorgan spotlights Mondi for its strong market position and relentless focus on eco-friendly solutions. Mondi isn't just making boxes, they're developing lighter, stronger, and recyclable packaging that big brands crave. Their diverse portfolio, corrugated, flexible, and engineered materials, insulates them from market swings. With a strategic presence in fast-growing emerging markets, Mondi is set to capture rising demand as middle classes expand. Financially, they're disciplined, investing in high-return projects and acquiring innovative companies. Mondi's vertical integration, from sustainable forests to finished products, gives them control over costs and quality. Their MAP 2030 plan sets concrete sustainability targets, attracting ESG-focused investors. Product innovation is constant. Think recyclable food pouches and pallet wraps replacing plastics. This keeps them ahead of regulations and competitors. Mondi's balanced business model, global reach and sustainability focus make it a top pick for long-term growth. They're not just following trends, they're shaping the future of packaging. Investing in Mondi is a bet on e-commerce and sustainability, two unstoppable forces. While no stock is risk-free, Mondi's leadership and innovation make it a compelling choice. Definitely a name to research further. Next is Smurfit Kappa, the go-to name for corrugated packaging. JPMorgan's thesis: Smurfit Kappa is perfectly positioned to ride the e-commerce boom. Every online purchase fuels their growth, but it's their innovation that sets them apart. They design custom, efficient packaging that saves clients money and reduces waste. Their closed-loop model, owning forests, mills, and recycling facilities, gives them cost control and supply security. E-commerce and FMCG packaging provide both high growth and stability, making their business resilient. Sustainability is core. Their boxes are mostly recycled and fully recyclable, supporting the circular economy. The Better Planet Packaging Initiative pushes alternatives to plastics, keeping them ahead of regulatory trends. Financially, Smurfit Kappa boasts strong cash generation, stable margins, and shareholder returns through dividends and buybacks. Their geographic reach, Europe and the Americas, diversifies risk and opens new growth avenues. Smurfit Kappa is a pure play on durable trends: e-commerce, sustainability, and supply chain resilience. They're a critical partner for major brands, not just a supplier. For investors seeking quality and growth, Smurfit Kappa checks all the boxes. JPMorgan sees them as a leader with deep competitive moats. If you want exposure to the e-commerce packaging surge, this is a top contender, worth a closer look for any serious portfolio. Third is DS Smith, a pioneer in the circular economy. Their promise: turn recycled cardboard into new boxes in just 14 days. DS Smith is one of Europe's largest recyclers, collecting more material than they use, a true fiber-positive company. Their closed-loop system creates sticky relationships with retailers and municipalities, managing waste and supplying packaging. Strategic acquisitions have built a dense European network, keeping them close to customers and cutting costs. DS Smith is aggressively replacing plastic, working with brands to design fiber-based alternatives for supermarket shelves. Their focus on FMCG and e-commerce ensures stable, resilient demand. Financial discipline and smart capital allocation support ongoing growth and innovation. Performance packaging, lighter, stronger boxes, delivers real savings for clients. Their European focus aligns perfectly with strict environmental regulations, turning policy into opportunity. DS Smith isn't just sustainable, they're smart, efficient, and deeply integrated with their customers. They're consolidating the market and leading the plastic replacement trend. For investors, DS Smith offers a compelling mix of growth, sustainability, and market leadership. JPMorgan sees them as a key player in Europe's packaging future, a standout for anyone betting on the circular economy. Fourth is Stora Enso, a leader in the bioeconomy and renewable materials. Their vision, anything made from fossil materials today can be made from trees tomorrow. Stora Enso owns vast Nordic forests, using them for everything from packaging to construction and textiles. In packaging, they lead in high-quality virgin fiber for premium and liquid packaging, markets known for stability and quality. Their real edge is innovation. Biocomposites to replace plastics, and lignin-based materials for glues, resins, and even carbon fiber. Their Building Solutions division is pioneering engineered wood for climate-friendly construction. Stora Enso's ambitious climate targets and massive investments in sustainability attract ESG-focused capital. They're divesting from declining paper segments to focus on high-growth, high-margin areas. Owning over 1 million hectares of forest is a unique, appreciating asset, an inflation hedge, and a carbon sink. Their transformation is bold, but positions them for long-term, high-value growth. Stora Enso is more than a packaging company. They're a renewable materials science leader. JPMorgan's pick is a bet on the world's shift to sustainable alternatives. It's a complex, long-term story, but the upside could be huge if their vision plays out. A must-watch for future-focused investors. Last is Meyer Melnhof Carton, or Carton, the folding carton specialist. They dominate Europe's carton board market, producing the material for everyday items like cereal and medicine boxes. Their edge? Operational efficiency and expertise in recycled fibers, giving them a cost and sustainability advantage. Carton's two divisions, board and paper and packaging, cover the value chain from raw material to finished product. Their focus on food and pharma packaging means stable, recession-resistant revenues. Recent acquisitions have expanded their reach into high-margin pharmaceutical packaging, a market with high barriers to entry. Moving up the value chain, they're shifting from commodity board to value-added specialized packaging. Their relentless pursuit of efficiency and automation drives industry-leading margins. Deep, long-term relationships with major consumer brands make their revenue base sticky and reliable. Carton is less flashy but offers stability, quality, and smart strategic evolution. For investors, it's a story of defensive growth and operational excellence. JPMorgan sees them as a leader in a large, non-cyclical market. If you value reliability and steady returns, Carton is a strong contender. Sometimes doing one thing exceptionally well is the best strategy. Definitely worth your attention. That's JPMorgan's top 5 paper and packaging picks for 2026. We've covered Mondi, Smurfit Kappa, DS Smith, Stora Enso, and Carton, each with a unique angle on sustainability and e-commerce. This sector is full of innovation and growth, often overlooked by most investors. Remember, do your own research before investing. Dig into financials and strategy to find your best fit. Which of these stocks stands out to you? Let us know in the comments. If you found this valuable, hit like and subscribe for more deep dive investing insights. Thanks for watching. See you in the next video.